Hello and welcome to Sectors Up Close. I'm Ramzan Karmali. Today we're looking at the technology sector and my guest is Matthew Miskin, Co-Chief Investment Strategist at John Hancock Investment Management. 2023 has been some year for the technology sector. For instance, the S&P 500 Information Technology Index is up by over 50% over the past year. The so-called Magnificent Seven mega-cap tech stocks have grabbed the headlines in 2023. None more so than Nvidia. It has dominated the AI chip market in recent times. However, some of the other seven are currently Nvidia's biggest customers, but they're working to reduce their dependence on the company's chips. So what impact could this have in 2024? And can big tech names continue to surge ahead? Well, to help answer those questions and more, I'm joined by Matthew Miskin, Co-Chief Investment Strategist at John Hancock Investment Management. Matt, thanks so much for joining us. In the notes that you sent over to us, you said that it would be hard for big tech to continue to surge ahead in 2024 as it has this year. Why do you believe that?
So the valuation on the technology sector in the S&P 500 is now about 27 times forward price to earnings ratio. The 20-year average is about 17 times. So the valuation of these companies have really grown over the course of the year. And embedded in that is also unbelievable earnings estimates. So next year, their earnings estimates are about 16 to 17%. Now, as you said, technology companies are up about 55% this year. Tech earnings are only up 5%. A lot of it has been earnings growth estimates going up and the multiple going up. So we just think it's been the global workhorse of the equity market. We just think it's getting a bit tired into 2024. It's going to be harder to see great returns.
So, Matt, many analysts believe valuations are high like you do, but they think that the growth justifies it. So why do you disagree with them?
It's just going to be hard to materialize. Into next year, they're forecasting this huge earnings growth of around 16%, and every sub-industry is forecast to see earnings growth. It's unusual to see analysts that optimistic around earnings. So again, it's embedded in a lot of the earnings estimates already with a high multiple. You put those two things together, we think it's going to be hard to achieve that bar. That's, again, why we want to be careful expecting too much out of technology stocks into 2024.
We talked about the Magnificent Seven in the introduction there. They've really dominated things. But are there other tech names, less well-known names, that we should consider in 2024?
Well, broadly speaking, those names are going to be smaller in market cap. And in our view, the larger market cap companies do have higher profitability, better balance sheets. Those smaller cap companies don't have the great balance sheets of those larger cap counterparts. We would actually underweight smaller cap tech into next year. We would just simply look at other parts of the market that aren't trading as expensive, but in terms of the overall index, unfortunately, all of its expectations are huge earnings growth next year, and all of it has seen multiple expansion over the course of 2023.
Matt, many economists are predicting lower interest rates for 2024. Will that help tech stocks, and in particular, the mega cap stocks?
That has been the biggest positive catalyst to tech, and really just this whole narrative that the Fed is done raising rates and baking in rate cuts is helping technology sector. And really, it's the best macro environment you can ask for tech. So right now, the unemployment rate is still low. The economy's slowing, but still positive. Inflation coming down. It's been macro nirvana for tech. Next year, we're likely to change that macro backdrop, weaker growth potentially. And if rate cuts do come, usually that comes with weaker growth. That could knock down the multiple and not provide this really huge tailwind to tech next year. We think it moves from a tailwind to a headwind in terms of the macro backdrop in technology stocks.
It's fair to say that 2023 has been dominated by AI, and anything that's involved in AI, in chip making towards AI, has done really, really well. Do you think that's still going to be the case in 2024?
I think we brought forward a lot of the gains, whether it's AI or cloud computing, frankly, have really seen a lot of those future cash flows embedded into 2023. We think into 2024, it is a positive tailwind, but the thing is the price is already reflected. It's already embedded in the prices in a lot of these stocks. Again, that's why the valuation is so elevated and why we want to be careful in tech into next year.
Matt Miskin, Co-Chief Investment Strategist at John Hancock Investment Management. Many thanks for those interesting thoughts. And that is your roundup of the technology sector. I'm Ramzan Karmali, and this is Reuters.